Well, to get the latest on what's moving the market, let's cross over to Lagos to chat to Adewale Champion from Oceanic Capital. Adewale, thanks so much for joining us this morning. Well, looking at the market's picture here, we've got the NSE erasing year-to-date losses to 18.3%. Take us through the sense you're making of the markets at the moment and what your expectations are for the trading day ahead.
The equity market has rallied in the past 9 trading sections as the NSE All-Share Index recorded a 40% gain within this period. Volume traded yesterday was very high. That is about 619 million shares compared to what we have seen in the market in the past few months, average of 400 million shares being traded. This was largely due to block trades on stocks of IHS, a telecom company, and UAC Nigeria. The trading the shares of these two companies accounted for about 43% of total volume traded. We remain bearish on the equity market going forward as the ongoing audit of banks by CBN and lack of new money in this market will continue to hamper sustainable market recovery. Secondly, we expect profit takers to continue to take profit on some stocks which have rallied for more than 10% past week.
Well, looking at some of the companies in the spotlight, we had Bank PHB releasing unaudited results for the 12 months to June the 30th. Gross earnings reflecting a 63% increase, but profit after tax falling back close on 44% on account of provisioning once again. What did you make of those numbers?
Like I've said, Alicia, the highlight of the result reported yesterday, that is the unaudited 12 months result of Bank PHB, was the 16.3 billion provision for losses, which in our view may likely due to the bank's exposure to the capital markets. The net profits fell sharply by 43%, obviously due to this provisioning, despite the fact that the banks grew its top line, that is its gross earnings by 63%. Within the same period, with this result, the bank's earnings multiple is 4.1 times, compared with 6.2 times industry average, while price to book is 0.7 times compared with industry average of 1 times. We expect the bank to maintain its growth trend going forward as it plans to report 18 months by December 2009 for this current financial year. It seems the markets have reacted positively to these results as the stocks has gained, as the stock gained maximum of 5% to close at 5.79 kobo at the close of trading yesterday.
Taking a look at UBA, I mean, this was a player that released results as well. And, you know, being highlighted, like you've said, with the case of Standard Chartered, is that a lot of this provisioning being made by Nigerian banks is on account of the exposure they've had to margin loans and the capital markets themselves. But we've got UBA, for example, boasting this ability now to support private and public enterprises across the continent. This at a time when credit lines are difficult to access. I mean, how confident are you in their risk mitigating strategies and ability to manage even these loan books in the current climate where risk mitigation has become imperative?
We believe that the banks in Nigeria should continue to support the broader economy despite the challenging operating environment. Like I've said, the fund that UBA have secured, I think, from the African Union Bank, basically to support the infrastructure in the economy. We see that as a good development in this market. And we also expect that other banks which could have access to foreign loans or foreign funding could should also, I mean, support, I mean, the broader economy. Yeah, the risk management will continue to be tight, given that some of the losses written down are due to some of the exposures, not only in the capital markets, even downstream of the energy sector and the public sector. however, the banks should continue to support the economy.
Okay. Well, with that being the view, Nigerian banks have recently seen to be more proactive with regards to transparency and proper accounting of their books. It's been demonstrated by their, their ability to disclose and make provisioning for loan losses for the capital markets, margin loan exposures and other related activities. How do you see this impacting on the equity markets moving forward? Because thus far, we've had some trading houses saying that it's had little impact on investors' investment decisions.
Markets will continue to reward banks and other listed companies that who show to be transparent with their position, and whose management seem to have the ability to overcome the current challenging operating environment in the system. In our view, the write-downs of these loan losses is just the beginning. We expect banks and other companies, like I've said earlier on, to show full, to give full and transparent disclosures, even on a quarterly basis, and a clear explanation on how they intend to grow both their top line and the bottom line going forward. We have seen some banks doing this, and their stock market valuation shows. We expect other banks and other companies on the NSE to follow suit, because the investors actually want to see true value in these stocks.
Financials aside, we saw Unilever publish numbers during the course of yesterday's session as well. This is a consumer product company and to some degree a good defensive stock as well. What did you make of those numbers, and what's your view on Unilever at the moment?
Unilever Nigeria reported their unaudited half-year results yesterday. The net profit grew marginally by just about 10%. Sorry, the turnover rather grew marginally about 10%, while the net profit grew by 43%. Like I've said, Unilever is operating in the consumer subset of the market. Despite the fact that it seems that most Nigerians' disposable incomes are somehow tight, we still see that this company seems to have overcome some of the challenges, operating challenges in this environment, and be able to post an impressive result. If you see that result also, the losses they recorded in terms of their foreign loans was due to the exchange discrepancies, because the loan was obtained from the parent company in foreign exchange currency, that is dollar precisely. So due to the depreciation in naira against US dollar, that's why they reported such a huge losses on their book.